Good afternoon, everyone. We'll just start the meeting in a minute or so, waiting for people to log in. Good evening, ladies and gentlemen. Welcome to the Q3FY26 earnings conference call of Emmvee Photovoltaic Power Limited, hosted by Radhi Capital. As a reminder, all attendees will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. If you have any questions, please feel free to press the raise hand button. We'll call on you in turn and unmute your line so you can speak. You can also post your questions in the chat window, and we'll try to answer either during the call or get back to you on email. Please note that this conference is being recorded. Kindly also know that the audio of the earnings call is a corporate material of Emmvee Limited and cannot be copied, rebroadcasted, or attributed in the PR media without specific and written consent of the company. Please note that anything said on this call that reflects the outlook towards the future, which can be construed as a forward-looking statement, must be reviewed in conjunction with the risk that the company faces. A copy of the disclosure is available on the investor relations section of the website as well as on the stock exchanges. To give you an in-depth understanding of the company and answer all your queries, we have from the management side today Mr. Manjunatha DV, Chairman and Managing Director, Mr. Suhas Donti Manjunatha, President and CEO, and Mr. Pawan Kumar Jain, Chief Financial Officer. I now hand over the conference to Mr. Manjunatha for his opening remarks. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and thank you for joining Emmvee's Q3 Financial Year 26 earnings call. Our Q3 was a strong quarter for us on both performance and execution. We delivered healthy financial results, supported by stable operation across our facilities. At the same time, we continue to build the foundations for the next phase of growth, which capacity addition and progress in integration. At a headline level, we reported total income about INR 11.7 billion, EBITDA of about 4.1 billion, with margin around 36%, and profit after tax of about 2.6 billion. These outcomes reflect the combination of scale, operations discipline, and value of our integrated operational models. On the operation side, we commissioned 2.5 gigawatt of module line at Sulibele, taking our aggregate module capacity of 10.3 gigawatt. We also completed the land payment and also acquired the land, which is planned for 6 gigawatt of integrated cell and module facility at Devanahalli. And the project work is progress in line with our plan, and all our financial also has been closed for this purpose. We ended the quarter with an order book of 9.3 gigawatt of as on 31st December 2025, including a 4.5 gigawatt of multi-year TOPCon cell order. This provides a good visibility as we ramp up capacity. With that overview, I will now hand over to Suhas, who will take you through the financial and operation details.
Thank you, Chairman, and good evening, everyone. I will summarize the key financial and operating highlights for Q3 FY26. For the quarter, revenue from operations was 1,152.3 crores. That is up by 118% year-on-year and up 2% quarter-on-quarter. Total income was 1,167.9 crores, up by 117% year-on-year. Gross profit was 543.8 crores with a gross margin of about 47%. EBITDA for the quarter was 413.4 crores, up 105% year-on-year, with an EBITDA margin of 35.9%. Profit after tax was 263.6 crores, up 166% year-on-year, with a PAT margin of 23%. A few line items to note. Finance cost was 33 crores, and that was lower than the previous quarter, which is subsequent to the loan repayment. Depreciation was 74 crores, reflecting the expanded asset base as new capacity is commissioned. For 9 months of FY 2026, revenue from operations was 3,311.1 crores. EBITDA was 1,163.3 crores, and profit after tax was 689.2 crores, indicating strong performance through the year so far. On operations, we commissioned the new 2.5 gigawatt module line in the quarter. Installed module capacity is now 10.3 gigawatt, and cell capacity stands at about 2.94 gigawatt. Q3 production was about 737 megawatt of modules and about 412 megawatt of cells, with utilization of approximately 43% for modules and 76% for cells, reflecting ramp-up and product mix. Finally, as of 31st December 2025, our order book was about 9.3 gigawatt, including the 4.5 gigawatt multi-year Concall order. That covers the highlights, and we are happy to take any questions now, sir.
Thank you. We'll start with the Q&A. The first question is from the line of Mr. Subramaniam Yadav. Mr. Subramaniam, please unmute your line. You're on screen.
Yeah. Thank you, sir. Thank you very much. Sir, if you can let us know what is the mix of DCR and non-DCR in our module sales?
Yeah. Hi, sir. Thank you for the question. The mix of DCR will be about close to 50% in the order book.
In the order, in the execution, sir?
In the execution,
yeah,
it's about 40%, sir.
DCR is 40%.
40%. DCR.
Oh, okay. Okay. And sir, in terms of this rising costs in the raw material like silver paste, aluminium, etc., so how are we looking at it, and what kind of impact would be there in the margin going ahead?
Yeah, I think that's a very relevant question this time, sir. So when we talk about the silver paste, the technology has come a long way, and so has our operations. For example, today the silver paste what we are consuming, we were consuming about double the silver paste per cell when we started the line in September. Because of improved technology, screen designs, and process R&Ds, the consumption of silver paste has come down drastically. And the targeted consumption of silver paste is 40% to be coming down another 40%. There is an opportunity. This is what we have seen even in China. And when we talk about all materials in general, you have seen that we have mentioned this even in our DRHP time, that our contracts are all, most of them backed by pass-through contracts. So any major changes in materials are passed on to the customer.
Okay. Okay. Understood, sir. Sir, if you can give us silver paste as a percentage of your cost, manufacturing cost, or maybe the selling price. So what would be the percentage of that in the cost? Silver paste alone?
About 2%.
2 cents.
2% of the selling price of the cell.
Yeah.
2 cents.
2 cents or 2%?
Sir.
2 cents, sir. 2
cents.
cents. It comes to only if you take about sell price, the percentage comes about 13%.
Okay. Or sell price is the 13%.
Yeah. On the module, it is going to be less.
Okay.
On the module, it's going to be around 8 to 9%.
Okay, 8 to 9%. This is after our reduction in the silver paste?
Yeah.
Okay. Okay. Understood, sir. Thank you.
And there is a further possibility.
Okay, further possibilities also there. So, sir, the impact on the EBITDA would be lower than in that case.
Sorry, sir, can you repeat your last question?
The impact of this rising cost on our EBITDA would be lower. If you can quantify how much we can look at this number going ahead, EBITDA level margin, or if you can say the spread in the EBITDA.
Sir, we are right now very comfortable at the level of EBITDA per watt peaks that we are about what we are getting, either for DCR or non-DCR. We don't see any pressure in that EBITDA per watt peak even going forward.
Okay, so we
What
can
we have
maintain
achieved,
this.
the company has achieved so far. We continue to achieve that number, sir.
Yeah, the 35% margin what we are getting, we can maintain that.
No, I'm not saying you don't look at percentage of margin. The reason is because in this industry, we have seen in multiple occasions, and I've explained this, is that the price of the module or cell can change because of raw materials or other things. So that should not simply give you a wrong perspective if it inflates the percentage. For example, like I said, when we were started the manufacturing in 2006 of modules, the price of module was 3 euros per watt. But today the price is 15 cents. That doesn't mean margins have gone down. Our absolute margins per watt peak, absolute margins are doing extremely fine. But it is so it will not look correct, look at percentage margin. So the EBITDA margins, absolute margins, what we are looking at, that will continue to be in a very strong position.
Okay, understood. Sir, in terms of spread also, when we look at it, the spread comes to roughly around 8.5 cents now, right, on the gross level.
Sorry, sir, 8.5.
The gross level, our EBITDA, at gross level, our spread comes to around 8.5 cents. So we can maintain that thing?
Yeah, looking at a blended EBITDA.
Yeah, blended.
So
one,
subject to our DCR and non-DCR ratios, we can maintain that. With the current listing, we can maintain it, no doubt.
Okay, sir. Great. Thank you, sir. Thank you very much. Yeah.
The next question is from the line of Sahil Seth from Anand Rathi. Sahil, I'm getting you on screen. Please unmute yourself and go ahead.
Hi, sir. Congratulations on the good set of numbers. So my first question would be, if I look at the production number and the revenue number, the blended realization for module has decreased significantly, even on a year-on-year basis or a quarter-on-quarter basis. Is this because of a change in your sales mix between DCR and non-DCR, or are there any pricing pressures you are experiencing in the market right now?
No, you're absolutely right. I mean, there is no pricing pressures in the market, which basically is seen by our EBITDA that we have shown. It is because of the percentage mix of your DCR and non-DCR.
So currently we have 40% of revenue from DCR. So earlier in the previous quarter, was it higher?
Yes.
Which has led to the increase?
Sir, here what we are looking at is what we are discussing is the production numbers. The sales, what will happen is it's that is something that we usually don't disclose the percentage of DCR and non-DCR because it's competition wise, it is a sensitive information which no peers are also disclosing today.
Okay. And recently we also got a 4.5 gigawatt cell order. So going ahead, what would be our strategy? Like how much percentage of our capacity would be used for captive consumption, and how much would be used to cater to third party?
Most of our capacity will be used for captive consumption. Third-party catering will be limited. Even if you see this 4.5 gigawatt of cell is spread over 5 years. So when we are having a capacity of 8.9 gigawatt of cell capacity, this is a very marginal number.
Okay. And what are your thoughts on the recent news on China removing the rebate for the exports by Chinese manufacturers? How would it
So
affect us?
this is not something new, sir. I mean, initially it was about 18% rebate was there. That had come down to 13%. Then it came down to 9. Today they're saying 0. So the market adaptability will happen based on that. And of course, like overall sense perspective, it can be treated as an advantage to Indian manufacturers because overall gap between the Chinese modules and the Indian modules will be narrowed down. But this really doesn't matter much. There's not going to be any
Wouldn't our
significant
raw
impact.
material cost also increase?
Not necessarily. That's what I was telling. What happens is like one is like even if there is any increase, it happens to be passed through. And number two, what happens is in China, it is the price that they decide to set. It has not really mattered on this, right? Like we have seen this in the past when there was no BCD, for example, in India. The difference between Chinese price and India price was hardly less than 1.5 cent, where China was cheaper than that India. But after 44% BCD, also the price difference was same. So math really doesn't really fit in here. It is something time will have to tell. But again, in our perspective, we have passed through when it comes to non-DCR orders to large key account customers that we cater to in usual sense.
Okay, sir. Thank you.
Thank you, sir.
Thank you. The next question is from the line of Abhi Sehgal from Singularity AMC. Abhi, I've got you on screen. Please unmute yourself and
Hi, sir. Congrats on the great set of numbers. I have a two-part question. First being, can you share some light on the current DCR pricing and where do you see the trend going, let's say, in the next year, by the next year, same time? And second being, you mentioned by FY28, you will have around 16.3 gigawatts of module and 8.9 gigawatts of cell. That would give you around 3 gigawatts of excess module. So do you think around FY28-29 there would be still some module-only demand in the market?
So thank you, sir. Thanks for the question. The first question, about the DCR price realizations. DCR price realizations today are about 24.5 cents per watt. When we're looking at on a significantly decent size of orders, I'm not talking about like retail spot orders. That will be on a much higher price realization. This is on a bulk order basis. It's about 24.5 cents. And when we look at that pricing that we have not seen so far change downwards, but
Okay.
But again, our efficiencies are increasing and, our cost economics are getting better. That is one thing that's significantly helping, which you can see. Because in our efficiencies, if you see, we started off with 24.5% efficiency. Today, we're at 25.2% efficiency. And that is a growth that we have seen. Next is, and then, then we are going to moving to your next question, which is about the gap between module and cell. So this, if you see that it's kept intentionally. Basically, 60 module capacities have a tendency of peak utilization to be at 60 to 65%, whereas cell will be about 85 to 90%. The reason is what happens is in module it's an inline production, whereas cell is a batch production. Module is a made to order product, whereas cell is a made to stock product. So for these reasons, we have made sure that we keep our module capacity slightly higher than cell capacity so more or less effectively my production will be similar, where I'll have almost 100% of the cells for my module capacity.
So you're saying cell would be at 80% of the nameplate capacity, 80% utilization of nameplate capacity.
85 to 90% of the effective capacity.
Effective. Then it would be lower in terms of nameplate capacity, right? Around 70%.
Correct.
But then also you have some.
Depending on what technology the market is using at that time. For example, today we are using at M10. Soon we are going to be transitioning to G12R, where the effective capacity and the main nameplate capacity difference is lesser. So in case by 2028, if the market decides to move in the direction of G12, that time there will be no difference between nameplate and effective capacity. That time it will be full 85% utilization to 90% utilization can be achieved of the nameplate capacity.
It would be the same. Your module production and cell production would be the same, broadly in line.
Yeah, broadly in line. And that even the whole idea is like the cost of module production on a little higher, let's say half gigawatt to 1 gigawatt is something that it would not hurt at all. Whereas you can't have the opposite side. You can't have cell capacity more than your module capacity.
I agree.
That is more difficult because of the high capex.
And so just to confirm, you mentioned DCR pricing 24 cents per watt P, not INR.
Correct, sir.
Yes. Thank you so much, sir. Have a great day.
Thank you.
Thank you, Abhi. The next question is from the line from Prakhar. Prakhar, you're on screen. Please go ahead. From Ambit.
Thanks. Congratulations on good set of numbers. So two questions. One is, firstly, on the order book, if I see we've got this 4.5 gigawatt cell order, but bearing that on non-DCR or DCR modules, there has been very limited growth even in the first 9 months of the year. So do you see that as a concern, or do you see that picking up in later maybe part of the year?
So the inflows, if you see, is going well. For example, if you're looking at if you're looking at the 9 months, for example, if we have grown, we have seen an increase in we are not only seeing the increase in order book, but we are also seeing that the orders have been executed to that tune. So we have executed so much orders, and still we have added capacities.
So
we have ordered the order book. Yeah.
So let's say if I accumulate 9 months production, approximately if I assume sales, so it is around 2 gigawatt. And by March, we already had around 5 gigawatt of order book of modules because we didn't have cells. So effectively 3 gigawatt of orders is what we received in this year on modules, right?
Correct. And that is how it should be, because we don't want to take up more orders than what we can execute in the next 12 to 18 months when it comes to modules. The difference between modules and cells, what happened, the people who I sell module to are developers, and these developers can only get bank financing after they've signed their PPA and after they get the land. So after that is the order that I take is the orders that are backed by advance and are confirmed orders. And that is how we have planned, and that is the order inflow that we are envisaging. And that kind of a size of order, that is 6.3 gigawatt of order that I can execute in the next 12 to 18 months is quite strong when you look at my capacities additions. And that is what we look for. We don't want to overbook the order either.
Okay. And and second question was on realizations, as a previous participant asked. So let's say our production is around 740 megawatts. Sales would be roughly, if I assume similar sales, then my blended realization is only 15 cents. I get there will be mix of DCR and non-DCR, but even on a blended basis, if I let's say assume all non-DCR, still it is coming out to be only 15 cents. So what is the disconnect? Is it that the sales is lower, or maybe some inter-segment elimination, or how to read the realization number from top line?
Top line, there will be a couple of so there'll be a couple of different things. I mean, one is it's difficult to read that way, because what will happen is your cells, you'll do individual cell sales. Then we also do non-DCR and DCR mix, which you are trying to, trying to understand. So I think the best way to see whether there is pressure on realization or not is to understand the profitability and the EBITDA of the business. So the profitability and EBITDA is only possible to come when there is a decent realization that there is.
And also it is not 15 cents, it is around 18 cents, around 17.8 to 18 cents realization.
They're calculating rupees, yeah. That is rupees, 15 rupees is what you're saying.
Oh, yeah. Sorry, 15 rupees, 18 cents.
Yeah.
And just last question on margins. So I just wanted to understand your partnership that you did. I mean, the tech tie-up with Fraunhofer. Because if I compare margins across peers, you buy first and at the first 37% margin. So is that helping, or are we able to optimize our costs better? Just some guidance on that.
Sir, I mean, it's a mix of a lot of things. But if you see historically also, I think we have enough data in the with us, given our history and our history. We can see that year on year and quarter on quarter, we have been quite efficient in managing our costs, as well as making sure that we don't operate at the bottom of the chain in the even in the pricing, because of the kind of quality products that we are known to produce and the kind of A-list customer base that we cater to. We always happen to enjoy that kind of a realization as well as margin slightly because of that.
Understood. Thank you. Thank you so much.
Thank you, sir.
Yes,
Thank you. The next question is from the line of Yash Durani from Code Advisor. Yash, I've got you on screen. Please unmute yourself. Yash, please unmute yourself. We'll take the next question. Next question is from the line of Sarang from Vimana Capital. Sarang, please unmute yourself and go ahead. Sarang, please unmute yourself.
So please check from our end, is there an unmute issue? Because they are mentioning they are not able to unmute.
Yeah, just one second. We'll take next question from the line of Udit from Pinpoint X Capital. Udit, can you unmute yourself?
Yeah, good afternoon. So, sir, you just mentioned about the DCR panel prices. So what is the difference right now between the DCR cells, the DCR panels, and the non-DCR cells and panels? And do you see any pricing pressure on these?
So there is no price pressure, sir. Both are, as you know, that it is all passed through this thing. It is around 5 to 6 cents. The max is 7 cents. Difference is on the retail, and the retail will be around 7 cents less, and the bulk orders is around 6 cents.
This you mean to say between the DCR and the non-DCR panel? 6 cents is the difference.
Yeah, 6 to 7 cents.
Okay. And with the cell capacities coming up, in India, do you have any update on the ALCM mandate, whether it's going to come, is it going to be delayed, and do we have sufficient capacity for it?
So I think So with the ALCM mandate, I mean, we can see that the capacities that are there on ALMM list 2 today is already to the tune of 25 gigawatt. And then there is also some capacities that probably could come up. But when it comes to the mandate being there from June 2026 onwards, there is no change on that. There was sufficient time that was given by the ministry, and the ministry's intention is quite clear. In fact, I think what is more reassuring is they have released a plan to further give the ALMM for wafers. So that itself shows that the intent is to further deepen the ALMM aspect and not move this further.
And also, sir, do you see any delays from the developers in taking up the DCR and both the non-DCR panels, like on the projects? Do you see any delays in general?
Sir, no, sir. I mean, in our perspective, we have not seen any delays. In fact, that the increase in the way our order book is coming is a way for you to judge whether there are delays. I think we are all seeing very good order books that are filling up our capacities, and that there is no delay that we are seeing so far.
Okay, sir. Thank you. That's it from my side.
Thank you.
Thank you. The next question is from the Deepak from Swan Investments. Deepak, I've got you on screen. Please unmute yourself and go ahead.
Yeah. Hi, good evening, sir, and congratulations for a very good set of numbers. So firstly, wanted to check it out on the China point regarding export, removing of export rebate. Would it also open up export market for the Indian player as a whole? How do you see that development, even beyond US market?
So when we talk about export markets, sir, export market is something that we continuously keep evaluating, and I think that is something that we probably will have to still see what is the capabilities. But we are seeing more markets that open up. For example, in Europe, there are regulations that mandate about 10% of their capacities to be used from non-China cell and module. That also includes non-China Chinese ownership also. For example, Italy is the country that started it and ratified that bill, and that is further going to get extended to Germany also, and many countries going to follow after that. So there are some opportunities that will open up, but I think this probably could be a little early to gauge that. But currently, like, our focus strongly remains on the domestic market, but we have a strong team in the US as well as in Europe to see any opportunity that comes in. We can see that.
Okay. And secondly, sir, coming to the DCR market, if I were to look into your slide number 16, where we have given the projection for the DCR market from the demand perspective. So just wanted to check it out when from June 26, when there is going to be implementation of the ALMM 2 list, which would also include cell as well. Should the PSU demand entirely come into the DCR market, and hence the demand environment should be very high, or this will remain at a 2, 3 or 5 megawatt, which we have shown in the presentation? Just wanted to see the clarification on this.
So basically, let's see this is on a conservative side. What's important to see is that there are many tenders that have already happened before August 2025, and any tender that are taken place before August 2025 that are exempted from this ALMM list 2, which is the DCR.
Sure.
And so those particular capacities are something that is going to come in after So whatever is going to be the bids that are going to come in from August is going to be completely under ALMM list 2, and all C&I, all your other like rooftops and any other installation is going to be the same.
DCR.
And we, like, the capacities that are totally all the installations that is going to happen in India is completely going to be with DCR. But I think you understand that the data that we put in our presentation are publicly available data, and to the tune of best extent that is representing the market, that is what we have put in the numbers.
Okay. So, sir, I was just coming from the point of view, let's say, if we were to say, okay, demand is going to be 18 to 22 gigawatt, whereas supply has now come down to the 26 to 29 gigawatt on the DCR market. So, would that also imply that there is going to be the pricing pressure in the near term?
No, see, what we are saying is, like, for example, what you are seeing is about 25 gigawatt of installed capacity, right?
Yeah.
And there is a difference between the installed and the effective capacity. Then what difference is going to be there on the utilization? Because most of these capacities that you are seeing are new capacities. So that is also that is why I'm saying the ramp up that is going to be there, that will take place from FY25 to FY28 is the time that there is sufficient capacity for the ALMM, but there is there is always going to be a difference between the experienced capacity and the new capacity. So what you are seeing for companies like Emmvee, who already have existing experienced capacity, proven products and track records, we are companies that are going to be the first preference for the developers and of the markets, which are limited in numbers.
Okay. Okay. And sir, just wanted to check it out on the utilization factor which is given in the presentation. If I were to calculate cell capacity based on 2.9 gigawatt, the production number and utilization number, the usual cell production would have been should have been higher. So, whereas in the presentation it is given at 412 megawatt. So, just wanted to check it. Am I missing something in this calculation?
So that is, the presentation talks about the effective capacity utilization, and I think you have seen in all our public information that we have put in the RSP and previous presentations also, that the effective, and also there's a footnote, effective capacity is the actual installed capacity adjusted for working days as well as the product specification. So what I was explaining earlier, the G12 is the installed capacity, size G12, which is about 11.5 to 11.6 watt per cell. Whereas now what the market demand is and what we are producing is about 8.5 watt per cell. So this is the difference that you will see between effective and installed capacity.
So, sir, for this 2.9 gigawatt, what is the effective capacity?
So effective capacity is 2155.
2155. Okay. Okay. Thank you. Thanks a lot for your explanation.
Thank you.
Thank you. The next question is from the line of Shashank Jha. Shashank, I've got you on screen. Please unmute yourself and go ahead.
Hi. Am I audible?
Yes, we can hear you.
Yes, sir. My question was regarding the capacity. So basically, I have done my research and found that in India, after 2028, accumulative capacity will be around 180 gigawatts for module, combining all the listed and non-listed players, and 140 gigawatts for cell. Okay. So my question here is that after FY28, that is FY29, 2030, will there be that much demand in India?
Yeah, I think that's a very valid question, sir, and I think it's an important question to address also. So if you, I'll just take this in a couple of different, scenarios. So basically, one, we are talking about 180 or 140 gigawatt of capacity. Let us keep module aside. Let us only talk about cells, because
Yeah.
cells capacity is what is going to be relevant. So 140 gigawatt of capacity we are talking about by FY 2028. And this includes a lot of new capacities. I mean, people who have not had the experience of cells, and a lot of announcements that are made. And I think last time when we checked, the publicly available data in May, almost that time it was about no, that time it was about 12 to 15% of the capacities that were announced had no progress after even 3 years of announcement. So that is one point that we had seen. Then what is also going to be the biggest differentiator is how much of this capacity is going to come in, and how much of this capacity is going to be able to transition to make good quality cells. Because manufacturing cells is not easy. One is not only about the high capex, but the complexity of the process. And this we have seen that a lot of different approaches are being taken, and time is going to tell what is going to happen. But what is certainly going to be the scenario is there is going to be a difference between experienced players and non-experienced players. And that is something that we have not only seen not only what we are going to see in India, but what you are also seen even in China that has happened, right? So because just taking an example of modules, right? Module being much simpler and so much different. If you see FY25 for that matter, FY25, sir, the module capacity in India was about 110 megawatt, correct, right? And with that, gigawatt. And with that, India consumption was only about 36 gigawatt. And we exported about 8 gigawatt. So that is about 42 gigawatt of capacity. And out of that, India imported 14 gigawatt of modules. So only for about 28 gigawatt of capacity, India, you know the utilizations, you know the demand for companies like Emmvee, and you know the results the companies like Emmvee have shown. So there is always going to be that difference the market is going to give and is going to treat. And Emmvee being one of the first cell manufacturers of TOPCon technology, established TOPCon lines, and with our capability, we are going to be the preferred module supplier for our developers.
Okay. Sir, one more question. Demand forecasting, like building capex, before building capex, you may have done some demand forecasting that this is the number of gigawatt cell demand that may come in FY 29-30. So can you give those numbers? And one last thing is regarding G12R module. So smaller companies like Alpex is moving to G12R. Like I have been through their con calls, and they are right now starting to move to G12R. So by how many years, or after how many years, you can say that it will be necessary to move to G12R, and if required, how much time it will take for us to move to G12R?
So we have already started producing G12R modules, and
Okay.
that's already part of our orders, and I think Q3 also we have supplied with G12R. So we are always in ahead of the market and adapting. For example, if you see the definition, the timeline of when the market should move is very different for Emmvee, very different for X player, very different for Y player in this market. For us, we are always earlier ones to move. For example, for us is TOPCon. TOPCon module, for example, I'm not talking about cells. When our module sales, we did about 70% sales of TOPCon and only 30% of monoPERC sales in FY25. And in FY26, we are doing zero monoPERC, 100% TOPCon. We are probably one of the only companies doing that transition. So our transition is always quite ahead in the market, and we are always quite adapting first.
Got it. Sir, and your EBITDA margin very superior compared to other companies, sir. So why is it so?
Uh, That's what, like I said, I covered this answer in the previous question. Basically, like, we have seen this pattern not only this quarter, but I think you can study the history of MV and history of others. Our costing and as well as our cost efficiencies have always been quite well managed. And also because we operate at a very premium segment of the industry. For example, if you look at our client list, it is all Hero, CleanMax, Ayana, Blue Pine, KPI, like very key accounts, A class A accounts that are there. We tend to have a very strong preference from our customers when it comes to giving order. So that is
Okay.
the advantage that you are seeing with MV.
Got it. And sir, demand forecast numbers for FY 29-30, if you have done any.
No.
Shashank, can I please request you to come back in the queue?
Okay. Yeah, please
Thank
share
you.
those numbers, sir. Please.
Sure.
Some-
Sure.
The next question is from the line of Bharti. Bharti, I've got you on screen. Please unmute yourself and go ahead. Bharti? The next, Bharti, can you unmute yourself? Okay, we'll take the next question from the line of Vinay. Vinay, please go ahead with your question. Unmute yourself and go ahead.
Hello. Yeah, hello. Hello.
Yeah,
Yeah,
Am I
please,
audible?
please go
we
ahead.
can hear you.
Yes, sir. First of all, congratulations for the excellent numbers. I had just one question that, with respect to the raw material prices such as silver or maybe the cell, which is basically imported in US dollars, the input cost being rising, what will be the effect, the overall the pricing of the finished goods? How much do you see going up due to this? Also, due to this China rebate cut, there must be some kind of hoarding rush. So all these factors considering, what will be the overall cost that will be going up and the final cost of the products also going up from here?
Yeah. Sir, I think basically like the way we look at things, we basically like, for example, USD is something that, for us it's all passed on, because what happens is all our key contracts, right? We take all key account contracts, everything is done in US cents. So only at the time of execution we change it to INR, we bill it in INR. But orders are all taken in US cents. So whatever exchange rate is all passed on to the customer. And when it comes to the rebate, as I addressed this in my previous both rebate and silver price, I've already advised this in my addressed this in the previous answers, but I'll just say it again. Silver, for example, with improved technology, improved process R&D, improved adaptation of the latest screen designs, process and silver paste, we are able to reduce our silver paste consumption, as in from what we are currently consuming, we used to consume 2 times of that silver paste earlier per cell. So this has all kept the costs in line, where we are not seeing the effect. And we further are aiming to reduce the silver paste consumption by another 40%. So these things will further, like, strengthen our costing. And that is with technology improvement we are doing this. And so I hope I've answered your question brief.
Yeah,
But
thanks a
this
lot.
is
Thanks a
what.
lot for
Thank
that
you.
clarification, sir. One more thing, sir. Are the domestic orders, like you said, KP Green, are these domestic orders
Vinay, sir,
fixed price?
can you please speak?
Yeah. So these domestic orders, like KP Green, are these fixed price tenders or they are also linked with the dollar price and
Sir, most of our orders, especially for key accounts, pretty much like everything is done on US cents, and then they are converted at the time of execution.
so the other players, the smaller players, they might be having some kind of impact with the dollars because you are selling in USD, but the players who are solely dependent of Indian market, they must be facing some other little bit challenges, right, sir? If we can
Difficult to comment on other people's strategy, but this is how we are doing, sir.
Thank you. Thanks a lot, sir.
Thank you.
Thank you. The next question is from the line of Moksha from Systematics. Moksha, I've got you on screen. Please unmute yourself and go ahead. Moksha, can you please unmute yourself? We'll take the next question from the line of Anushka Vora. Anushka, please go ahead. Unmute yourself and go ahead, Anushka. Anushka, please unmute yourself. We'll take the next question from the line of Utsav from One Capital. Utsav, please unmute yourself and go ahead. Utsav, please unmute yourself.
Yeah, thank you. Thank you for the opportunity. Sir, I know silver has been addressed couple of times, but I just want to again get some clarification on it. Let's say 6 months back, silver was around 0.7 cents as part of the total module cost, and today it's close to 2 cents, like you mentioned earlier. Have we taken any price hike in the DCR module segment because of this, or are we absorbing this change in silver price?
This number?
Hello.
It's 0.7 cents and 2 cents.
No, 0.7 cents. I don't know how you got it that, sir, because earlier as also it is around 2 cents only. It is 1.75 to 2 cents. Where you got from the 0.7, I don't know. Because even if you see the consumption of silver paste earlier is around between 185 to 200 milligrams.
20.
The 1 lakh rupees, it comes to 2 cents only. I don't know where you got it, that number. And today also it is come because of our process improvement and the consumption come down.
So today, would it be fair to understand it's 9 mg per watt peak, or would it be higher than that?
It's lesser than that, sir. It's lesser than that.
Yes, 0.83.
Understood. And sir, on your customers' end, we keep reading about connectivity delays for utilities. Are we seeing any project delays or any offtake delays from our customers?
This is already we have addressed, sir. If you see, whatever the PPAs which is signed and which is the loan sanction, that only we have taken as an order booked one for us. The cancellation or anything is talking presently, which is not done the PPA yet. So that also still no cancellation has taken place.
Sir, even for signed PPAs, there are some delays because of connectivity issues, right?
For that they have the.
Sir, what happens is like, I mean, like, see, when there is a project, there could be some delays, like, because of connectivity, because of land, but that delay is something that is we have not seen any abnormal delay lately because of one particular reason. There are always some delays that could happen, and there is always a cascading. One order gets delayed, the previous order will come for this thing.
Understood. Thank you so much.
Thank you. The next question is from the line of Nikhil Abhyankar. Nikhil, please unmute yourself and go ahead with your question.
Yeah. Hi, sir. I just have a couple of questions. So I was just going through your presentation. I saw that your quarter on quarter, the cell production is up by almost 100 megawatts, but it is not exactly reflected in our EBITDA growth. For QOQ, EBITDA growth is around 10, 12 crores. So just can you highlight that and why exactly is it so?
Yeah. So the noise behind. Okay.
Nikhil, can you please unmute yourself? There's some background noise. Yeah.
Okay. So the 100 megawatt is improvement on the production, because that that whatever production we do will not be able to sell in the same quarter itself. It will going to be also move into the next quarter. So the whatever we have produced, that will continue to be there in the coming months. That results you can see in the coming quarter.
Okay, understood. And sir, any outlook on the outlook on utility scale DCR demand? When do you expect it to kick in?
Sir, we already started seeing, utility scale. Okay, utility scale will take still about another 9 to 12 months. But C&I IPP demand is something that is already started.
For the DCR. And DCR, utility also is continuing.
So say for FY27 across India, how much do you expect this C&I DCR demand?
No, C&I DCR demand is something that is going strong. As you have seen, with DCR, there are many places demand is coming from. Right, like if I have to break it down for FY27, we are looking at firstly your like the current ones. If I were to talk, one is the Surya Ghar Yojana, which is about 30 gigawatt. Out of that, we have seen about 5-6 gigawatt only completed so far, and we are looking at Kusum. That's another 30 gigawatt. That the fresh there is a lot of discussion that Kusum 2 is going to start from Jan onwards from April onwards. So that is something that we are going to have. Then the C&I demand. C&I demand, if you see in the country today, we are seeing about 15-16 gigawatt that has been completed in a year. Especially we are looking at last year. And this, as C&I has been the fastest growing segment in the solar industry, that could grow further, especially with the adding of data centers and all the new power requirement that's coming from the industry side.
Sure. And final question, any plans on adding wafer capacity as of now?
Certainly, sir. Wafer is the next transition that we are looking at doing, and that is something that we are looking. As I think we have also announced that we want to do ingot and wafer capacity quite soon. But the only thing is that we don't want to commit on a timeline right now. The reason is that we want to get some clarity on the implementation of ALMM on wafers and the demand for wafers when it is going to start onwards. So from then we will start working on the wafers.
Awesome. Thank you and all the best.
Thank you, sir.
Thank you. The next question is from the line of Bharti. Bharti, please go ahead with your question. Unmute yourself.
Hello, am I audible, ma'am?
Yes, sir.
Yes, please.
Right. Thank you so much, sir. So can you throw some light for the renewable sector as a whole beyond FY28, some kind of qualitative commentary? Because one of the binding constraints on ground today is that there is shortfall in grid and transmission capacity. Right, grid expansion is lagging generation. Some kind of PPAs are not getting signed, leading to project delays. Project offtakes are getting delayed. So what kind of visibility do you see in the ancillary infrastructure? How is it evolving beyond FY28? Thank you, sir.
Yeah, thank you, ma'am. When we're looking at the renewable sectors and the infrastructure for that, we're already seeing BESS integration that is happening. apart from earlier what we used to see standalone solar or just solar and wind being the way of tendering or installations that are being taken place. Today we are seeing solar plus BESS and solar plus BESS up to 6 hours of storage. Yesterday I think the tender closed at 3 rupees 11 paisa, which is extremely low compared to even coal or thermal or even any capacity, any particular energy source. So with that kind of a scenario that we are getting into, I think grid stability or the transmission pressure on transmission lines is something that you will not see. There is positive here is that there is a realignment of the kind of demand that there is going to be, which is very good for the industry as well as for the sector.
Okay, sir. And so the kind of tendering do you foresee beyond FY28 for the projects?
Absolutely, ma'am. I mean, tenders are going quite well. That I think will happen in a good phase. So there is quite a good backlog also that is there, and further tendering also will catch up for that pace, because the thing that we have to all as a country solve is to give power for the requirement that there is. And that is something that I don't think anyone is seeing a slowdown at.
Noted, sir. Thank you so much and all the best for the future. Thank you.
Thank you, sir.
Thank you. Next question is from the line of Arindra Banerjee. Please go ahead. Unmute yourself and go ahead.
Yeah, thank you, sir. Congratulations on a very good quarter. So I just wanted one clarification. So in your presentation, you have mentioned your installed solar cell capacity of around 2.9 gigawatt. But if I look at the ALMM list of December 15, so your approved capacity is of around 1.5 gigawatt or so. So by when do we expect the remaining capacity to be approved by ALMM? If you could provide a color on that.
Yeah, absolutely, sir. I mean, that's a very valid observation. So if you look at it, a couple of things here. One is the difference between the installed and the effective capacity. That effective capacity at 2.155 gigawatt. And on that, the way ALMM works is on the day they come for inspection, whatever is the running capacity on that day is the capacity that they approve, right? And so when you can see this particular capacity of 1,600 megawatt is as per our utilization rate at that time. And and the way ALMM works is once your utilization improves, you can invite ALMM for an audit and they will come back and re-audit it and increase the capacity accordingly. So that is something that we will do in the due process. And it is in line with what we are anticipating.
Understood, sir. Very clear. So if I could squeeze in one more question. So regarding your forecast regarding the DCR demand, so I think the numbers seem fair to me at least, but I just wanted to understand, like, would it be fair to assume that by, FY30, the majority of, or almost the entire market would be DCR led and non-DCR would be a very paltry portion of the market, or do you see non-DCR to still have a healthy share by 2030? And another thing is because of another thing is because of the the large amount of cell capacities that are coming up. Do you see a sizable market for standalone selling of solar cells going forward as well, or do you think it will be mostly a module-based market and selling of solar cells will be phased out? If you could provide a color on these two questions, please. Thanks.
Yeah. So basically, when it comes to the demand for DCR, I think that by FY 2030, I don't see any capacity that is going to be of non-DCR. It could be extremely small, very immaterial capacity, if there is any, that is going to be there for demand. It is all going to be with DCR. And when we're looking at that particular period, I think that is quite clear That is quite clear. Then, for the later part of the question, sir, can you repeat the second part of the question? Sorry, I think we lost it while.
Yeah. So I just wanted to understand, right now there's a market where you can sell solar cells on a standalone level instead of a DCR module.
Correct.
So
Yeah,
going
correct.
forward with, cell capacities coming up, do you see that market still existing, or do you think it will be only a
Yeah, I think
module-based
so.
market?
No, I think that will exist to a very small extent, but that will not be a majority. That will be a very small portion.
Sure, sir. Understood. And thanks for the answering the questions, and all the best for the coming quarters.
Thank you. The next question is from the line of Yogesh Patil. Yogesh, please go ahead and unmute yourself. Yogesh, can you unmute yourself?
Am I audible?
Yes, you are. Please go ahead.
Thanks for taking my questions. Sorry, but again, I'm going back to the silver. A small understanding. Silver 185 milligram to 200 milligram in the current consumption per module per cell. Will it be possible for you to provide a silver-based consumption per watt basis, or any thumb rule of silver-based consumption per watt basis?
Sir, I mean, so basically the reason why we are not giving you the silver-based consumption per cell or per watt is because these are all done by process R&Ds, and a lot of technical upgradations and material upgradations are taken place. So because of the sensitivity of that information, we would restrict from giving that information out. But maybe there could be a publicly available information that is there that we can find and send it to you if there is any.
But any thumb rule for silver-based consumption per watt basis? Any publicly available data as per your understanding?
Cell with it. I mean, so basically, I think what we told that time is that it's about 2 cents. Is the silver paste, the cost of silver paste about per watt. So based on that, you can probably calculate what the consumption levels are at. I think this is something that we told.
So the difficult part is that the silver is moving so rapidly on a daily basis. So okay, no worries. Secondly, again on the commodity side, if you could give us a ballpark number, how much quantity of aluminum in terms of grams or kg generally required for the single module, it would be helpful.
Aluminum?
Module.
No, you're asking for aluminum or for silver?
Aluminum frames which we generally require for the
aluminum frame for the model. Okay, for aluminum frames are usually about 3 kgs per watt. Around 3 kgs per module. It will we usually use.
Okay, thank you, and wish you all the best.
Yeah.
Thank you. Due to time constraint, we are just taking the last question for the day from Aman Jain. Aman, please go ahead and unmute.
Hello. Am I audible?
Yes, you're audible.
Yes, you are. Please go ahead.
Yes. Yeah, sir, I understand that we have talked about this quite a few times now about the silver cost, but I just wanted to ask one follow-up question. I mean, in the last 4-5 months, silver cost has more than doubled. And you were saying that with technology advancements, we have reduced silver consumption so much that it has almost negligible effect on our cost. So does that mean we have brought down silver consumption by more than 50-60% in just, in the last 3-4 months only?
Yes, definitely.
Is that the case?
Yeah, your understanding is 100% perfect.
Okay, so it has been so advanced, and we are expecting another 40% reduction going forward from here.
Yeah, further. From where we are today, not from the basic.
Okay, got it. Thank you so much, sir. That's very helpful.
Thank you. That was the last question for the day. I would now request Mr. Manjunatha to give his closing remarks. Thank you, and over to you, sir.
Yeah. Thank you everyone for joining us today and for the thoughtful questions. We value the time you spend with us each quarter, and we appreciate the trust you place in Emmvee. Your questions and feedback help us to stay focused and improve how we communicate our progress. If you have any follow-up after the call, please reach out in our investor relations team using the contact details shared. We will also continue to keep the market update through our disclosures. Thank you again for your continued support. We look forward to speaking with you again next quarter.
Thank you once again and for your time and participation. On behalf of Emmvee Photovoltaic Power Limited, this concludes today's conference. For any questions, please feel free to write to us on the email IDs mentioned on the invite. We appreciate your engagement, and now you may disconnect your lines.